very much looking forward to the presentation today with Cheree Warrick. She has a tremendous background and level of expertise to offer you. She writes business plans, creates financial forecasts for companies who are seeking funding from banks and from angel investors. She had a 5-year tenure at a national government contracting firm and was influential in helping that company grow from 50 million in annual revenues to 200 million. She set up pricing models for the RFP responses, prepared their annual budget, and summarized all of the budget to actual results on a monthly basis. In 2009, the entrepreneurial bug bit her. She decided to leave the corporate world and join her family's bookkeeping business. And so now she is assisting the company, serving over 35 clients in 22 different industries. She does monthly financial statements, produces annual budgets, corresponds with CPAs in the preparation of corporate and personal taxes. As the company continues to grow, they decided to seek bank financing for business expansion. And the president of the bank where they went said that her plan was one of the best he'd ever read. So she decided to learn as much as she could about how companies position themselves to receive the business financing. Her goal is to help over 1,000 companies receive over $1 billion in financing. She authored a book to help business owners understand exactly what investors want to know. And just as a sidebar, everyone, the great insight from that is if investors want to know, it's going to be helpful to you as the business owner to know it. Her book and strategies are praised by angel investors and commercial bankers alike, including Barbara Corcoran of the TV show Shark Tank and Valerie Gatos, founder of the Angel Venture Forum of DC. She has a bachelor's in international business from American University and a master's in finance from George Washington University. So we are excited and privileged to have her here with us today. Now, as a thought for all of you, because there are so many on the call today, what it does mean is that in addition to the questions you submitted ahead of time, we will take questions in the question panel, and I will feed those to her as we go through the conversation. What's important to know there is that this is a chance for you to fill it in, get more information as we go. So the recording of today will be available afterwards. And while you are all in mute mode, you do have a chance to submit those questions by typing them in. So thank you, everyone, and welcome, Cheree. Please go ahead.
Thank you so much, Kathy, and everyone who's on the call or listening on the auto replay. So excited to be here today. I wanted to start off by featuring a quote I recently heard by a man named Kevin O'Leary. If you watch Shark Tank, he's the guy that sits in the center, and they call him Mr. Wonderful. If you don't watch Shark Tank, you may want to watch it because it's a phenomenal business-focused show. Well, Kevin O'Leary was speaking at I think it was a university, Notre Dame, I think, actually. And he said that the companies that come on Shark Tank that are funded have 3 things in common. Kathy, would you like to know what those 3 things are?
Absolutely, yes.
Okay, so number 1, he said that the company owners are able to explain the vision of the company in 90 seconds or less. What the company does, the vision of the company in 90 seconds or less. Now, we know that as an elevator pitch, but you have to be able to clearly articulate what you do. The second thing he said is the team, the people that are at the helm of the company, are strong individuals that know how to build, manage, and grow companies. But do you know what the third thing is that Kevin O'Leary said all companies that receive funding do well? It's they know their numbers. They are able to answer financial questions without hesitation. So what that tells us as entrepreneurs is that we have to know our numbers as well. Now, I don't want to scare anybody because you don't have to know tons of numbers. Usually there are about 3 or 4 metrics in every business, or 3 or 4 numbers in every business that if you're hyper-focused on them, you can grow your profits. And today we're going to talk a little bit about that, and I'm also going to answer some of the questions that you have. Does that sound good, Kathy?
Perfect, perfect.
Okay, great. So the topic today is maximizing your profit by knowing your numbers, and this is me, the girl on the right-hand side here. My story, like Kathy said, starts off with this woman who is my mother. She runs a company called Carolyn Does QuickBooks. It was started in 2006. I came to work for her in 2009 full-time. I left my corporate job, decided I wanted to be a part of the family business. And one of the interesting things is, of course, the recession hit about a year and a half later. And I got an opportunity to see the companies that did well in spite of the recession and the companies that went under. I got to see a lot of different industries, and the big thing that I became very, very good at is explaining to entrepreneurs what they should be looking for within their numbers so that they could make better strategic decisions. And I'm going to share a little bit of that with the audience today. It is going to be on a base level or a basic level of understanding, but then if people have more advanced questions, they're more than welcome to ask those as well. So one of the numbers you should know are your revenue goals versus your actuals. And I'll start off by telling you an interesting story about revenue goals. When my mother first opened Carolyn Does QuickBooks, we sat down and the first thing we talked about was how much do we need in order to survive, in order to live, pay the mortgage, car note, etc. And we had a number in mind. And we started a campaign called the Get 10 campaign. I told my mother if she could get 10 clients that paid her monthly, then she would have a business and she would know that the business could grow and survive. She said, okay, I'm going to get 10 clients in 6 months. She actually did it in 3.5 months because she was hyper-focused on a revenue goal. So for some of you, you may want to use the Get 10 or Get 15 or Get 5 clients type of goal system just to drive you. For others, it may be the projects that you want to take on and the average price per project. So there are different ways that we can maximize revenues and create revenue goals. Number one is getting more clients. Maybe you currently have 5 clients and you want to go to 10. The second way is getting current clients to spend more. Sometimes people don't maximize the clients that they have. They leave money on the table. And do you know the most expensive client to acquire is a new client? If you haven't maximized the clients that you have, then the first thing to do would be to go back to your current clients and get them to spend more. The third way that you grow your revenues could be getting your current clients to come back more. So some of us have operations maybe where people only come once a year. Well, what would happen if people came back to you once every 6 months? You could double your income. The fourth is getting current clients to refer. Again, referrals don't cost anything unless you have some sort of structure where you're paying a referral fee. So one of the things, I used to be a part of BNI. I don't know, Kathy, if you're familiar with that, Business Network International, and it was a referral organization. And a lot of people go into BNI with a referral goal in mind. I want to receive X number of referrals per year, knowing that if someone is referred to me, the chances of me converting that referral go up significantly. So, Kathy, before we go to the next slide, do you have any questions, or was I unclear about any of that in terms of the initial information I gave?
Yeah, no, and I love the point you made about BNI. So a lot of the people that are on the call do network, and the idea of setting that goal for those referrals feeds right into where you're going. And knowing that you're moving into some of those statements, the other questions I'm going to hold till they fit better.
Okay, all right. Yeah, so one of the things I will say about referrals is referrals rarely come from people you've only met once. So the goal the key to getting referrals is to consistently contact, touch, be in front of the same people over and over again. So when you go to networking events, when I used to go to a lot of networking events, I used to like to go to the networking events where half the room I already knew and the other half were new people. And the reason for that is because the people that saw us over and over again were the ones that referred. So that's just a personal observation based on our bookkeeping business, because it is a high trust business. And a lot of people on the call, I think, have high trust businesses as well.
Absolutely, yeah.
Right. So today we're going to feature the profit and loss statement of Awesome Startup, Inc. And Awesome Startup has subscription revenue. They have one type of revenue. So you can see month to month in August they did $98,000 in revenue, and in September they did $110,000 in revenue. Now, if we were looking at this in terms of knowing our numbers, and let's say we had different types of subscriptions, I would want to know which subscriptions are doing better than others. So that way, when I'm targeting my energy and my time and my money into campaigns to grow revenues, I want to target all of my energy on what customers want, because what customers want is what they'll pay for, and that shows up in revenue. And the truth is that numbers don't lie. So when and this is just a little QuickBooks profit and loss, but you can do it in any kind of accounting software. When you're looking at your revenues, try to set it up where you're able to drill down to a couple of different product categories that you have. So with that, Kathy, we can move on to the expenses, if you wish.
I'm sorry, move on to the
Expenses,
Oh,
unless you have a question about revenues.
well, so I have a couple of people that have questions about reading this statement that you have up.
Yes.
They're asking about several financials. So one of them is the profit and loss. It would be awesome for the people on the call to have you just walk through what this means, what they're looking at, so they understand it really well.
Sure. Okay. So a profit and loss is also called an income statement, okay? There are three parts to an income statement. There's the revenue, which is your income, which is highlighted here with the red. There's something called cost of goods sold. Cost of goods sold is any direct labor or any expense like raw materials that directly goes into the creation of the products you're selling or the services you're selling. So let's say you have a coaching company and you have 3 coaches underneath you, and those coaches actually provide services to your clients. Then their salaries would be considered cost of goods sold because it's direct labor. Okay? If they're doing any administrative work, then that goes to part 3 of the profit and loss statement, which is your general expenses. And general expenses includes, rent, utilities, marketing, gas, travel, being a part of this network, you know, if you're paying an annual fee or dues or subscriptions, anything like that goes in here. The goal at the end of the day is for you to have a positive net income. So if you're looking at the very bottom where it says net income, you want to have a positive net income. And how do we calculate that? We take our revenues minus our cost of goods sold minus our expenses. And that's how we get our net income. And depending on the type of business you have, some of you are just taxed on purely net income. Others of you are taxed on a hybrid. If you're a sole proprietor, you'll be taxed on your revenue as well as some of your net income. So that's a little bit more of a CPA question. But the way that we read this is we want to make sure, number one, that our revenues always exceed our expenses. And number two, we want to make sure that month over month or year over year we see an increase in revenue and either the same expenses or an increase that does not exceed or supersede the revenue. So what do I mean by that? And I'm going a little bit into what I was going to talk about next, which is the expenses. But if your revenue, like in this example, has gone up $12,000, all right, it's okay for your expenses to go up $5,000 if you've put the money into marketing, because that marketing money has gone into increasing the revenues more than you had before. But what you don't want and what you're trying to stay away from is your expenses exceeding your revenues unless you're doing it for a strategic reason, meaning that, you know, you are purchasing something now that you expect in the next 4 to 6 months is going to produce revenue for you. So that's how you read this profit and loss statement.
Excellent, excellent. Thank you.
So let's talk a little bit more about expenses. We have to be smart about our spending, and we do have to have some expense goals. However, it's not realistic to say that we won't have any expenses at all. So I'll give you an example. I rent an office space. I actually am part of a community office space, and I pay rent here every month. The reason I don't stay home is because I get so much more done being in a rented office space, number one. Number two, I have a prospect coming later today to meet with me. Every time I invite a prospect to come to my office, they have much more of a sense of calm, believing that, okay, Cheree doesn't work from her home. Not that I'm saying that it's bad to work from your home, but I'm saying that that me having an office space is an investment in my productivity, and it's an investment in me having increased revenues. Okay? Other things, other expenses you may have, any kind of marketing expenses. You may take you may take a credit card, so you know you may pay Square, for example, 3% to process that credit card, but know that people who spend on the credit card spend more money. So we want to have some sort of expense goals and actually have and look at that versus the actual expenses.
Cheree, just to let you know, the comment that you just made is bringing up questions, and I'm unsure if this is related to your topic or not. I know there are a number of people interested. They're wondering about credit card payments. So
okay.
What is your recommendation in terms of taking credit cards?
Oh, okay. Great question. So I will tell you that you should absolutely 1,000% take credit cards. But here is the mistake that I made, and I'm still paying for it. So don't do this. I signed up with a credit card processing company that charges me $70 per month, and I don't use their service. But because I signed a 3-year deal with them, I'm stuck paying them $70 per month, so it's money going down the drain. There are a lot of free options these days, including PayPal, which 10 years ago, if you were a small business and you used PayPal, you weren't considered legitimate. Now, it's okay to use PayPal. You can invoice from PayPal and you can be paid through PayPal. The other thing that I use, and I started using this to sell my books, but now they've expanded their services as well, is Square. So if any of you aren't familiar with Square, I just suggest you look it up online. But it's the little device that you put in your smartphone. And when someone gives you a credit card, you're able to swipe it and have them sign your phone or your tablet, and it actually processes the credit card for you. You are also able with Square to invoice people and have them pay by credit card. Now, the great thing about PayPal and Square is as a business, there are options that do not cost me anything on a monthly basis. I'm only paid when somebody actually uses their credit card to pay me. I like taking credit cards because I get paid faster than if I'm waiting for somebody's check. It's just something that I've noticed in my business, and other people notice it as well. I finally converted my mother. She has several people now. She would not take credit cards for years. I finally got her in March to start taking credit cards, and she has about 5 or 6 clients now that just say bill me monthly, and she has them on an auto cycle. So now she doesn't have to wait for her money. I know it was a long-winded answer, but
Yeah, no, that's great. I know that I get a lot of people also are asking me, okay, well, about PayPal, or if you're using one of the other processing services, what to look for, or that kind of thing. And I think you brought up a great point of, is there a fee, or what are the fees?
mhm.
So, yeah.
So you want to look at, is there a fee? I'm not saying the fees are bad, but I'm saying the fees are bad because these days, unless you are a restaurant or somebody that's processing tens of thousands of dollars per month in transactions, to me it doesn't make sense to start with a fee. Now, there's always a tipping point in any business, but I always believe that you should keep your fixed expenses as low as possible.
Yeah.
Yeah, and there are too many options these days where you don't have to pay until somebody processes a card with you.
Absolutely.
Yeah. Other questions?
I do have people asking about some of the other financial statements, so I'm going to let you fit that in where you want to go. They really want, just like with the profit and loss statement, they want to know more about what's important to them for the balance sheets and actual versus expense statements.
Okay. So let me finish up with this, and then we'll look at an example of a balance sheet, and I'll give you a couple of pointers about that. So we talked before about this P&L. Now I have the focus on the cost of goods sold, which it's okay if cost of goods sold goes up because the revenues have gone up even more in this example. Same thing with expenses. It's okay if your expenses go up as long as it's relative to the revenues going up. Now, what I like about this example is that the majority of the expenses have gone up because money has been placed into marketing and has been placed into research and development. So this is obviously a company that's doing some R&D. anytime we see something like that, we know that we're investing back in the company. So I am going to, let's see, since there seems to be questions about other financial statements, I'm going to escape out of this for right now and go into QuickBooks itself, okay? And even if you don't use QuickBooks, this will just be a simple example of a balance sheet. Let's see. Okay. This is a simple example of a balance sheet and how you read a balance sheet. So the whole key to a balance sheet is balance, okay? What that means is your assets that's listed here must equal your total liabilities and total equity, okay? So there are a couple of things that you should note about this. Number one is assets are broken up into current assets and something called fixed assets, and then the third one, which is not shown here, are long-term assets. So what's a current asset? A current asset is anything that is, financial term is liquid, meaning that I could put my money, I could put my hands on the money in 90 days or less. So things that go into current assets, this is $224,000 in the bank. It's also things like inventory that should be turned over or sold. Items like that, money market accounts, items like that go into current assets. Fixed assets are your buildings that you purchase. If you purchase a building, if you purchase furniture and equipment, computers, items like that, those are fixed assets. And then what we don't show here is long-term assets. That's anything that is that takes longer to turn to cash, but it's still an asset. So I'm trying to think of a great example of a long-term asset, but I'm drawing a blank right now. But just know that assets is everything that you own, everything that you own. So in this example, it's $290,000 is what you own. Liabilities is everything that you owe, everything that you owe. So in this example, we don't have any liabilities. However, liabilities in the real world would be if you have a credit card on your business, if you have a bank loan, if you have any other kind of debt. You have something called accounts payable, which are bills that have come in that you have not paid yet. Those are liabilities. Then when you take your assets and you subtract out your liabilities, you end up with your total equity. And that is your total value or your total business value. Okay? People use equity number as a launching pad for how much you could potentially sell the business for. Okay? It's also if you were going to just get out of business and you wanted to liquidate everything that you have, this equity number tells you how much you would be able to bring to your personal account after you have paid everything you owe. So this is not just for business, this is for personal as well. People often talk about net worth, your own personal net worth. And what they do is they look at the value of your house and they subtract out the mortgage that you owe. And they say this is how much equity is in your home. It's the same thing for a business. So that's a balance sheet. Do you want me to talk a little bit about how people use balance sheets strategically, or is that too much?
I think that would be really good. Just looking at, there were like 3 or 4 questions on it. So looking at what they're asking, you're going to cover it. You've covered most of it, and that will get them there.
Okay. All right. So strategically, if you're looking at a company and you're asking how strong they are, you really want to look at the assets that they have minus the liabilities. So this total equity or this total net worth of a company is very, very important because it tells you if they have a negative equity, that means that they owe more than they have in the bank. So as somebody who is considering extending them credit, you may be a little bit concerned about how you're going to get your money back. So that's one way of looking at it. Another way that people will look at it is if I'm going to lend money to this business or I'm going to become involved in this business, what kind of fixed assets do they have that I could liquidate or sell should something go wrong? So there are a number of ways that people use this balance sheet depending on what they're trying to achieve. Now, this is not a typical sample file for QuickBooks, so I can't really show you the expenses versus, the budget versus actual, but I will tell you that it's the same as understanding what your goals are versus what you're actually achieving. So with that, going back to our presentation here, with that, you always want to look at three key items. You always want to look at your revenue, you always want to look at your cost of goods sold, and you always want to look at your expenses. And you want to say, okay, my goal for revenue was $150,000. I only made 110. Well, why? What's the difference with that? Or you may say, well, I only wanted to spend $75,000. Instead, I spent $89,000. Well, what did I spend more on, and was it worth it? And sometimes it's sobering. Sometimes I had this recently where I realized I was spending too much money in a specific category, and I have vowed to pull that back because my numbers for last quarter, my revenues were fantastic, but I did not bring as much in to my household because I spent on something that I shouldn't have spent on. Let's just say that. So many of us have that issue. So I don't know if that answered that question.
Yeah, absolutely. Thank you.
Okay. I want to talk about just a couple of other things that people should know. One is your marketing ROI or your marketing return on investment. This is a number you should absolutely know. And marketing is anything you do to bring in a customer or a client. That is, oh, I'll give you a joke. People say, I'll use social media because social media is free. Well, but if your clients are not on social media, then it doesn't matter how free it is if it's not giving you a return on investment. Or on the other end, if you're looking at something that's a little bit pricier than what you were originally thinking of spending, but let's say, for example, you have an opportunity to give a presentation in front of your ideal client target market. Let's say there's 100 CEOs of Fortune 500 companies, and that's your target market, but the people want you to pay, $2,500 or $5,000 for a sponsorship in order to address that market, in order to be in front of that group of people, then we need to look at the return on investment or the ROI. So one of the things that I'm passionate about is making sure that we're always maximizing our ROI, and that's our time cost because our time is valuable, and our money costs. And we do that by becoming great at attracting perfect clients, monitoring where we receive our new prospect calls that convert into sales. Okay? Improve our sales conversion. So I'll give you an example of that. I wrote a book about December 2012. It actually came out. I noticed that when I mailed, like when a prospect contacted me and I mailed the book with a handwritten thank you card, I was converting about 80% of my leads. Okay? So yes, the book costs, $5 to $6 per book for me to have printed, plus a couple of dollars for me to mail out to the person. However, the return on investment for that, I can't even calculate. So you want to look at little things you can do to improve your sales conversion, and then test new marketing methods as well. So we want to look at marketing ROI. And all of your marketing dollars is on your profit and loss, and they should correlate with your revenues. Are there any questions about that piece, Kathy?
I think you're good there.
Okay. The final thing that I have is just understanding something called the lifetime client value. So what is a client worth to you if you have a coaching business where a client stays with you, let's say, for a year and a half, and they spend $1,000 a month? Well, we are looking at someone who spends $18,000 with you. Well, when you're looking at the lifetime value of a client, you become a little bit more strategic in your marketing, because you don't just think of the person as being $1,000 a month. You think of this person as being an $18,000 opportunity. When you look at it like that, you start answering the phone differently. But let's talk about how we can increase that even more. So things like bundling packages or creating upgrades, staying in contact with people after they have gone off your program because they may want to come back again, or segmenting clients and offering them something special could be a great way to increase the value of a client. So what do I mean by that? Let's say you're able to turn that client from an $18,000 client to a $19,000 client. Well, that's a $1,000 difference. Now let's say you have 100 clients that you're able to increase from 18,000 to 19,000. Well, you've just increased your revenues $100,000. And that's the point I'm trying to make, is a number you should know is the lifetime value of each client that you have and how you can increase the value of each client. And then finally, break even. So in order for you to live, there is a certain amount of money that you need to have coming in every month. If you have an assistant or someone working with you, you have to include their salary, you have to include rent, all of these things. Everyone has a break-even point. And I say here break-even point including your taxes, because there's no reason to pay your mortgage and not pay Uncle Sam. So one of the things that we want to do is make sure that we're able to calculate our break-even point. I went about 3 years ago to my CPA, and I asked them, I said, if I want to make $150,000 a year net after taxes, how much money do I need to bring in on a gross level or gross revenues? And he calculated it really quickly, and he told me. I didn't even go in. I actually emailed him that question. That could be a great question for you to ask your accountant as well, because they know your personal tax rate. So with that, other questions, Kathy, for you and your
Yeah, no,
viewers?
absolutely. So I've got a couple of them here, and you can pick your order in terms of going through them. I
Okay.
have people asking for tips in terms of starting their own business. And then I've also got people asking for additional tips on QuickBooks itself. So pick where you want to go with that.
Okay. Tips on starting a business. Um, Gosh, I would say that I've started a lot of businesses. In fact, people used to make fun of me because I started so many businesses and I failed so many times. So number one is start a business and try to make it as profitable as you can, as quickly as you can. Um, I would I would give it basically a year, maybe a year and a half to produce a profit unless you have just a really capital intensive business. I would give it no more than 6 months to produce a revenue. What do I mean by that? If you are not able to sell any of your services or any of your products in the first 6 months, and you honestly go out there and you speak to people and you let them know what you're doing, then the market has spoken to you and has basically said, we're not interested. One of the things a lot of entrepreneurs do is, you know, people are nice. They don't want to tell you that they're not interested, but they vote with their wallets. Numbers don't lie. So that'll be the first thing I would say. The second thing I would say with starting a business is, there are different types of businesses. There are some businesses um, that are started and meant to be small niche businesses. There are other businesses that are meant to grow to 10,000 employees. Neither one is wrong. However, you need to know what type of entrepreneur you are and what type of business you're building. Um, Third thing I would say about starting a business is know your target market and go where they are. So again, if you're looking to attract Fortune 1000 companies, you need to go to the places where the executives or the decision makers of those Fortune 1000 companies are. Um, so those are the things I could think of off the top of my head is is really putting your time and your money focus on those areas. Um, Questions about the starting the business tips or anything you want to add, Kathy, because I'm sure you get these questions all the time.
Yeah, no, we definitely talk to it. Of course, we want to keep this within the scope of what you're focused on. I am getting more questions on the QuickBooks side.
Okay.
So I've got actually 3 different people that are apparently new to QuickBooks and attempting to figure it out and struggling with that.
Okay. Well, there are a couple of things you can do. Number one is I would suggest contacting a bookkeeper within your local area and asking them if they would be willing to sit down and speak with you about your specific QuickBooks questions. There are a couple of things you need to know within QuickBooks. Number one is something called a chart of accounts. So if you see my screen here, you see this is a chart of accounts. And your chart of accounts is the basics of QuickBooks. And I will say this, QuickBooks is just a database. It's garbage in, garbage out. So if it's not set up correctly, just like if your marketing system is not set up correctly, or I don't know if everyone's familiar with CRM, your customer relationship management system, or your using Constant Contact. Your Constant Contact system is not set up correctly, it's going to produce garbage reports. The same thing is with QuickBooks. So you want to make sure that your chart of accounts is set up properly and it's set up with the categories you need in order to know where your money is going. So within QuickBooks, there are different types of categories. So you have the bank here, which is you could have multiple bank accounts. You have fixed assets. You have current assets, not listed here. You would have income, and you could have different types of income. You would have cost of goods sold, and you would have expenses. Okay? Now, within QuickBooks, let's say I have sales here, and let's say I want to add a new category of income. I click New, I click Income, and let's say I have a coaching service, and I want to say Coaching Fortune 1000. I'm able to put in Coaching Fortune 1000 as an account name and hit Save and Close, and all of a sudden it shows up. Okay? Then when I deposit money and I allocate it to that Coaching Fortune 1000, it will show up on the report. So I can see the percentage of people that are Fortune 1000 companies versus other types of companies that I'm coaching. Same thing with expenses. So you're able to do that as well. So going back to people who are struggling with QuickBooks, I would say the first thing I would do is sit down with a competent, either CPAs, just spend the money. If you're making revenues. If you're not making revenues, please do not do this, okay? Go make revenues first. But if you are making revenues, spend the money and have somebody sit down with you and customize your chart of accounts to your business and what you need to know within your reports. So this is the first thing that they would do, all right? The next thing that you would do is, sorry, go to banking here. You are able to write checks within QuickBooks. And writing checks, you can see that this is very, very similar to writing a physical check. It puts all the information in. So let's say on today, I did a pay to the order of Kathy Liska, okay? And it's going to ask me, say the name is not found. Do I want to add Kathy to the vendor list? I do a quick add to the vendor list. And let's say I'm paying her $25,000. Okay. I'm able to put a memo here. So I'm going to say webinar. And then in my account listing here, I'm able to select the drop-down menu, and I'm able to allocate that $25,000 to what I'm paying Kathy for. So let's say I'm allocating it to advertising and promotion. And then in this memo, I can put webinar as well. It's that easy. And then you can do save and close or save and new. Now, I do save and new, and one of the interesting things is my ending balance up here changes as well. So that's part two. Let's say we're doing my favorite thing in the world, which is depositing money. I'm able within QuickBooks to just go to banking, make deposits into the bank account. Instead of the memo, I can write in Kathy's name. And in the from account is where we put our income. We're actually, this is going back to your chart of accounts where we're categorizing it. And let's say we're getting this from, we're going to allocate it to the Coaching Fortune 1000. Then I'm able to put Kathy's name in. And let's say the amount I'm putting in is $40,000. I'm able to hit save and close. And then I'm going to go to the reports here. Profit and loss. Yes, for today. and I'm able to see just that quickly how my income for the Coaching Fortune 1000 is $40,000. That's what we just put in. And the advertising and promotion is $25,000. That's what we just put in. So our income is $15,000. And the great thing about QuickBooks is we can customize any dates here and change this so that we can see what the net income is. The other thing we're able to do is say, well, I don't know where that $40,000 came from. You see the Z there, that's the magnifying glass. You double click, and it shows you exactly what the memos are, which is why the memos are important within QuickBooks. So I hope that was a good basic explanation for you. I would suggest that you sit down with a qualified QuickBooks person that can show you for your specific business what you should be looking for.
Awesome, awesome. Thank you so much for that. It's I've used Quicken and QuickBooks for a long time, and they are fabulous programs. So let's see, what's come in now is a request for just your tips on implementing the different strategies you've given.
Okay, tips on implementing strategies. I say first of all, just start small. Don't worry about the massive overhaul. Just try to do a couple of little things. Think about what your revenue goal is. Think about how much you're willing to spend in marketing and what the return on investment should be for those marketing dollars and marketing time. Have maybe about 3 or 4 things that you're concentrating on, or start something like my mother's Get 10 campaign. Remember, it was a campaign where we said we're going to get 10 clients within 6 months, and she ended up doing it in 3.5 months. So that would be my first quick tip. My second quick tip is no matter how busy you are, my suggestion is you update your QuickBooks file once a week so that you know where you stand financially. You'll see things on your bank statements. You'll see auto debits coming out. It'll remind you to cancel certain subscriptions that you don't need. Staying on top of your finances makes you a much, much more attractive business over the long term. And it also goes back to you understanding where your business is coming from and where your business is headed. So those would be my tips in terms of implementing some of the things I talked about today.
Awesome, awesome. And we are getting close to that wrap-up stage. I am getting a number of people typing in thank you, etc. From what I'm seeing, I think you've done a great job in terms of answering the questions. Those of you on the call who do have additional questions, please feel free to type those in, and we can get those answered for you. And thank you, those of you who are writing your thanks for her presentation and the information. Okay, so a question is coming in asking you to review what numbers to be watching specifically again. You addressed it some at the beginning, so please come back.
So the numbers you want to watch are your revenue numbers. So let me go back to the PowerPoint here. So you want to look at your revenue numbers, your cost of goods sold numbers, and your expense numbers. And within expenses, understanding the amount of money that you're putting into marketing and time and what's giving you the greatest return on investment. You should also know your break-even point. So how much money do you need to bring in every month in order to pay all the bills, including your taxes? Because as small business owners, we don't think about it until April 15th comes along, unless you're paying on a quarterly basis. But we always want to have that money saved away. So those are some of the numbers. And, the truth is that it really does depend on you and your business, what you ultimately decide the numbers you want to really, really focus on.
Awesome. Awesome. Thank you. And let's see. What I'm seeing scroll past me right now, lots of notes. They loved the tip on the memo line and using it, so that was really good. I've got several people saying awesome presentation, excellent speaker, etc. So lots of thanks coming in. So good input there. It seems you have covered what everyone was interested in knowing. And we just want to make sure they all have your contact information if they do want to get in touch with you in the future. How can they do that?
Sure. So I have my email address here. My mother's company is called Carolyn Does QuickBooks. So she is a bookkeeper, and you can go to her website. She's a bookkeeper that specializes in the QuickBooks software. So if you wanted to reach out to us, we can, in order to discuss setting up your chart of accounts and any other items that you have. The other way, I didn't put it here, but my phone number is 703-934-4626. 703-934-4626.
Awesome. And what I can do is I'm going to email everyone who registered a link for today's webinar. I am happy to copy you on that so they can see your email address, and then also include your phone number in there if you want people to have access to that.
Perfect. Yeah.
Excellent.
Absolutely.
Excellent. One more question came in asking for your opinion on the tutorials in QuickBooks.
Well, I haven't looked at them in many years, but I would say that unless you are a super creative person that knows how to leap from the tutorial, what I remember was Larry's landscaping business, to your business, then great, use it. If you feel like that you're struggling, I would suggest you pay somebody for a couple of hours of their time, because your time is worth it, and get the customized help that you need in order to, because those tutorials won't show you how to set up your chart of accounts in the way that you need it so that you create meaningful reports for yourself.
Awesome. Awesome. Thank you. So really a lot of individual preference on that one.
Yeah, and you, depending on who you're speaking with, you don't even have to know. You can just say, I don't know what I don't know, but can you help me?
Right.
And I have people that come to me like that all the time. They don't know what they don't know, so they just want me to kind of come and give them an overview based on their industry and what they're doing and what's most meaningful for them.
Awesome. Oh, here's a great question for you. I do have a lot of people that are scattered, both all over the U.S. and all over the world, actually, on this call. And so some of them are wondering, do you do work with them on their QuickBooks remotely?
We have that service. Yes, we do. We have clients that are not in our local geographic area.
Okay. Okay. Awesome. Good to know, everyone. Thank you again. Fabulous presentation. Lots of good insights for people. To all of you on the call, do watch your email. You'll be getting a link to the recording so you can see it again on YouTube if you like. And then, of course, her email address and phone number will be in that email as well. So thank you again so much, and we do look forward to being of service in the future.
Thank you, everybody.